Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. It's been a pretty remarkable 6 months or so for some of the big US tech stocks. I wanted to take a closer look today at Apple and Tesla, which have both had great runs this year and even saw Apple become the first company to close above $3 trillion US. Of course, this is general information only, and you should certainly seek professional advice before making investment decisions. Josh Gilbert is a market analyst at social investment network eToro. Josh, welcome back to Fear and Greed.
Thanks for having me back, Sean. Good to be here.
Let's start with Apple. Quite a remarkable, few months, but few weeks. How much of this is due to the Vision Pro virtual reality headsets, do you think?
Look, I think any sort of new technology from Apple is always going to be exciting to shareholders because, in my view, when Apple do it, they usually do it right. So there's plenty of positivity there. But I think, in general, the way that we've seen tech perform this year, has been pretty outstanding. I think a lot of it comes down to this expectation of, inflation falling, and the Fed bringing down interest rates. Obviously, entering this year, there was plenty of skepticism over tech when we had inflation so high and the Fed still aggressively raising rates. I think we've got to maybe in some cases say a little bit of thanks to the banking issues that we had, because that sort of sped up this picture of lower inflation and a fall in interest rates. Obviously, AI has sort of helped along the way as well, and big names like Apple are certainly going to be in there as well. But I think, when we look at Apple reaching sort of $3 trillion, reaching that sort of prestigious club, I think it's a pretty historic day for the tech sector. And I think it just points to the strength of the business. As we say, we talked about that headset there. That is just another sort of string to Apple's bow. And I just think it points to, how good this business really is.
Yeah, I mean, why is Apple so good? It is so much bigger. Well, number two company, I think, is Microsoft, and it's about $500 billion less in market cap than Apple. What is it management? Is it just its ability to continually come out with great products? Is it brand? I suppose it's all those things, Josh.
Exactly. Yeah. It is all of those things. I think, brand is massive. Obviously, it's now known everywhere across the world. Pretty much you could turn to anybody that and I'm sure they own at least one Apple product. And I think that speaks for itself. But you can talk about, revenue. We can talk about, profit growth, profit margins, its balance sheet, buybacks. It's got a dividend. And I think that, what it's done this year as well, and over the last couple of years as well, is it's sort of reinforced itself as a safe haven in tech, but still delivering for investors with growth. It's, up more than 40% so far this year. And I think, in what is an uncertain global backdrop, that's really important. But we mentioned a few of their products there, but I think even if we take away iPhones, the Macs, any of the hardware, we've got another fantastic business in itself through its service segment. That includes things like Apple Pay, Apple TV, Apple Music. They're on target to do $100 billion in revenue for fiscal year 2024 with services, which is just a huge number. That's growing at double-digit growth. And I think it just shows how big their consumer ecosystem is. Once you're in, I think it's basically impossible to leave. And that just points to, Apple Pay and everything else that they have. I think Apple Pay and what they have there is a fantastic product. And, they've recently rolled out things like savings accounts as well. I think Apple is just going to continue to be this juggernaut that just keeps moving forward.
So the next 6 months, 12 months, 2 years for Apple, you don't expect it to kind of fall behind the pack, shall we say? And I'm talking about share price terms here.
Yeah, no, look, I think we're going to see revenue slow down a little bit because we're obviously seeing consumers slow down. But I think that where they are losing a little bit in terms of, I think this is in general across big tech where revenue growth is sort of slowing down slightly. That's being held by profit margins. And I think that's going to really keep, helping to drive Apple and, just general big tech over the next sort of 6 months. But yeah, Apple, it feels like it can't do any wrong at the moment, especially now it's sort of navigated a lot of the issues that it had in China and supply chains. Yeah, for me, I think that there's probably going to be a new iPhone coming out within that period as well over the next 6 months. Usually it's towards the end of the year. And I think that will just give, even more optimism as we head into the next 6 to 12 months.
Stay with me, Josh. We'll be back in a minute. I'm speaking to Josh Gilbert from eToro. Okay, what about Tesla? Why has it had such a good time this year?
So again, I think it had a torrid 2022. So I think that helps. The share price was absolutely crushed in 2022, but we've sort of seen a bit of a turnaround from Musk. He's going to be a happy man this year, even if being the richest man in the world wasn't enough to keep you happy. But just recently, Tesla reported a record quarterly vehicle deliveries, 466,000 deliveries in the quarter, which was higher than Wall Street estimates. So essentially, there was a lot of worry going into the year from Wall Street and investors that demand was going to crumble, and that in this economic backdrop, consumers wouldn't continue to keep buying cars. We've seen the complete opposite of that. Yes, Musk has had to implement price cuts at the start of the year, but that has sort of paid dividends. That has helped to drive volumes and those sort of delivery numbers. And as you say, it's done very well, up more than 120% this year. I think that the important thing to note, though, is that we're seeing sort of record deliveries. They're driving numbers out the door. But the sort of the one worry with that is how it affects margins. If you're cutting prices to drive volume, then it is going to affect margins at some point. And I think that's going to be a key focus later in July when earnings are handed down, because it's got super impressive margins, by far the best in the automotive industry, almost triple some of those other names like Toyota, etc. So I think that's going to be a number that is watched heavily by Wall Street. Consensus is for around about 20%. And I think that's going to be the key and the golden number. If we see a number below 20%, I think the stock comes under a little bit of pressure, because when you've got gains of more than 120% in the first 6 months of the year, you don't leave yourself any margin for error. So I think that's going to be a real focal point as we head into earnings later this month.
Josh, I've got to ask, people always talk about management being so important running companies. Elon Musk runs Tesla, he runs Twitter, and he runs SpaceX. How? I don't understand kind of how one individual can run all three.
Yeah, I don't know how he does it either. He must be superhuman in some cases. Yeah. But I think, again, a lot of the positivity that we actually saw from Tesla came after he announced he was sort of stepping down from Twitter. So I think that just goes to show how much he means to this business and why Wall Street and investors, like him and his management style as much as the product. He is Tesla, and I think that's really important. He has sort of stepped away from Twitter slightly, although it doesn't seem that way the way he tweets. But it does feel like he is pulled in a lot of different directions. And I think at some point that will catch up and that will affect, I think, one of these businesses somewhere. I'm not sure. As you say, you can keep running multiple billion-dollar businesses and allow them all to flourish. Maybe he is just superhuman, who knows? But I think his focus, he said a couple of times, is Tesla. And I think that's what's been really important for the stock this year to keep doing well, because he has said a number of times that he is sort of putting most of his effort into Tesla, and and no wonder it is the business that drives the most profitability for him, and is ultimately his baby. So.
Okay, so eToro has recently released a whole heap of data around what stocks Australian investors are buying. Looking at the US, I presume Apple and Tesla must be near the top of the list.
Yeah, absolutely. Yeah, Tesla and Apple still sort of ruling the roost there. I think, again, two names that people are very familiar with. They know these companies very well. Again, either in Australia, you own a Tesla or you own an iPhone. I think it's probably one or the other. These are two companies that everyone knows really well, and ultimately continue to deliver for investors. So that's the key. When you know a brand and it continues to provide returns, then there's no reason to not have loyalty to it.
Some of the other data looks at investor behavior. Investors are feeling less confident now in their portfolios, it seems.
Yeah, absolutely. So we have a quarterly survey of 10,000 retail investors. It's the only sort of real one of its kind. We ask 1,000 retail investors from Australia. So it talks to investors across 14 countries, as I said, 1,000 here in Australia. But it gives us the ability to look at what's currently impacting their investment decisions, their outlooks, what they're positive on, and what they're most sort of worried about. And investors are feeling slightly less confident here in Australia in their portfolios than they were sort of last quarter. but they still have faith in markets long term. They're focused on looking at the long term of this. Their primary goals for investing, about 50% of the respondents said it's to achieve financial independence. So it's understandable that I think investors are feeling slightly less confident so far this year, particularly in Australia. We've had the RBA that have been much more aggressive, I think, than many expected going into this year. Rates have, I think, risen probably further than many economists and most people would have expected. And we're starting to see a bit of pressure come through in housing markets. We're starting to see retail spending slow down a little bit. So it's understandable, I think, to see a little bit of weakness there across the board. But as I say, the main thing to take away from that is that they still have faith. They're continuing to invest. Their primary goals are to provide that long-term security to achieve financial independence. And I think that's really important because we all know that investing is so important, and the earlier that you can get started,
the better off you are.
Exactly that. So I think that, yes, we're seeing a little bit of weakness come through in confidence, and that is, again, inflation, cost of living fears that why people are saying this. But they are still planning on increasing the size of their investment portfolio at the same time. I think that's really important. Only 8% of our respondents said they're planning to reduce it. So I think that comes back to that consistency and continuing to invest, even if it's really with small amounts, even if you can put in $50 a month, that just is really helpful for long-term success.
Josh, thank you for talking to Fear and Greed.
Thanks for having me, Sean.
That was Josh Gilbert, market analyst at social investment network eToro. This is the Fear and Greed Daily Interview. Remember, this is general information only, and you should seek professional advice before making any investment decisions. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.